Happy lunch hour, albeit a couple hours early, because I thought I'd put this one up earlier this morning instead of lunchtime because of all the emails I got yesterday afternoon, overnight, whole 9 yards about tariffs, okay, and wanted to see how the market opened this morning, see what was going on. So I've been kind of waiting for that. So it's a little after 9:30 here as the market just opened. Dow's down another 1,000 points. The S&P's down another 140-ish. Yeah, there's still a sell-off going on. And reason why we're dumping more even after yesterday's 1,700 point drop on the Dow, 275 drop on the S&P, $1,000 drop or 1,000 point drop on the NASDAQ. What happened this morning? Well, as I kind of said in the title here, we're playing an economic game of chicken. China announced this morning, our morning, that they are going to institute a 34% tariff on American goods. So now what we have going on is a global game of chicken, I guess, if you will. And it's interesting that China's in here doing this because China's the one that's taking advantage of the rest of the world more than anybody else. Okay. Mind you, I think I said yesterday, we raised our tariffs on China not nearly as much as they raised it on us. China's tariffs now I don't know if it's 34% on top or 34% of what they're already doing. China was charging us tariffs of 67%. At 34, that'd be 101. Okay. So that means now anything we send over to China is doubled in cost. Okay. Send a $40,000 car, we got to send the car and $40,000. Now, if it's 34% of 67, then you're adding another 20%. We're at 87, something like that, whatever. Okay. So I don't know which way that is. And they're all pissed off because we raised our tariffs on them to 54%, 13 points less than what they charged. So I wanted to take a look at this and see how effective this is going to be. And we'll get into some of the other countries here too. In 2024, the United States exported, we sent to China, $143.5 billion worth of goods, okay? In 2024, we imported $467 billion worth of goods. $320 billion more came this way than went that way. That's a trade deficit of $320 billion. So what do we send to China? Okay. We send, as I said the other day, soybeans, petroleum, okay. I mean, natural gas, whatever it would be, petroleum gas, semiconductors, and aircraft parts. That's primarily the stuff. I mean, yeah, there's some other stuff. We send cars, but we don't even send $1 billion worth of cars, okay. Corn, sure, we send some of that. What does China send to us? Well, okay, obviously your television, your iPhone, your computer, yada, 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 made in China, okay? So electronics, plastics, okay? Things like toys, tons of stuff. That's another import that we get. And household goods, okay? Furniture, blankets, clothing, etc., etc., etc. That's what we're importing, to the tune of 4 times as much as we're exporting. Yes, this is a trade deficit. Okay, how are we going to get this brought down? Well, either China's going to let us export more, or we're going to import less. Okay? We'd export more if we had fair trade. We'd import less if we had fair trade. Both sides are wins, okay? We'd cut the trade deficit, which is huge for us. So that's what's dragging the market down this morning. Okay. Not to be outdone, we have the idiot politicians around the rest of the world flexing their muscle, which is really funny because they think they've got some muscle. And this is like, oh, I don't know, Andre the Giant going up against Dylan Mulvaney. That would be the appropriate one here. Emmanuel Macron, okay, is now calling on European countries, European companies, to cancel any investments in the United States because France is such an economic powerhouse in the world. People are going to listen to Macron. Ursula von der Leyen, comes up and says, you want to fight one of us? You're going to fight all of us. Okay. Challenge accepted. Yippee. Okay. The EU's GDP is not quite what the US's GDP is. Combined, okay, the entire continent is not quite there. However, we could come back over to this continent and North America. Mark Carney, the moron who is the new president of Canada, okay, this was just a humorous comment, stated that if America doesn't want to lead anymore, Canada will surely take that role. Yeah, okay, let me see. Canada's GDP is 9% of the US GDP. Okay. Do me a favor. Name me one Canadian automaker. Don't tell me Ford, don't tell me General Motors because they've got plants there. Name me one company in Canada. Canada, you can export wood and paper products, and you can export oil. Yippee. Okay. The maple syrup market ain't going to cut it. Okay. Molson beer is not going to be the world economic savior. So we have a whole bunch of countries around the world that are thinking they're going to be Billy Badass out here. And then we have a few that are going, we're not getting caught up in this. All right, we already know the other day Israel decided, hey, we're cutting all the tariffs on the United States. We'll go 0 for 0, and that'll be it. Not that we import a whole lot from Israel, okay? Okay, maybe if you get your matzo balls, that'd be fine, but there ain't a whole lot more coming. But other ones. Great Britain. They're so happy to be out of the EU. Brexit, remember that they're going, oh my God, this might have saved our economy, okay? Because they get to negotiate on their own, not as a conglomerate with the rest of the morons on mainland Europe, if you will. But Ireland, a lot of pharma companies in Ireland that we get the medicine from. Italy, Portugal, all the Scandinavian countries want to do this on their own. They don't want anything to do with the idiots in the EU, the Emmanuel Macrons, the Ursula von der Leyens. No, they don't want to do it. So we take a look at what this could feasibly mean to us. All right. Estimates are that now that these tariffs have gone in, we will collect somewhere around $600 billion in tariffs this year. Okay. Not that it's close to $37 trillion that we owe, but $600 billion is, hey, I wouldn't turn it down. Right? But remember what Trump said during the campaign. Let's get rid of the income tax, the IRS, and let's live on tariffs. everybody's worried. Oh my God, you hear all these congressmen, they're worried. This is going to kill the Republican Party. When they tried tariffs back in the 1920s, we lost 50% of the Republican seats in Congress. They're worried about their job, not your money. Okay, just giving you that. So why don't we take that $600 billion and say, here's an idea. Why don't we cut the income tax rate by, 2%? We made up the money in tariffs. We want to get rid of, let's start chunking down the income tax rate. Instead of being 10%, make it 8%. Instead of being 22%, make it 20%. Put the money back in the American public's pocket where they've been getting raped for so long. Okay. Money in our pocket, something that all of us pay attention to. Okay. Probably a whole lot of people freaking out in the last 25 hours now, roughly, about the stock market. Oh my God, my 401k. Oh my God, my IRA, my investment account, whatever. I'm going to give you a couple of things here. Yeah, the S&P is down, the Dow is down. Pretty much everything in the stock market is down. I don't know. Except for what I was talking about, a good place to be about 6 weeks ago, which was consumer staples. Notice who was up yesterday? Market down 1,700 points. Procter & Gamble, Coke, Pepsi, Kimberly-Clark, Colgate-Palmolive. Consumer staples, American companies making products that are on the shelves at the stores that you shop at. That was what it was. It's value investing. It's flight to safety. Everybody's saying, oh, gold is down. Gold's still up for the week. Okay, gold's down like $30 an ounce today. It's still up over $8 an ounce this week. Okay, even after yesterday. Yeah, people are moving to safety. A bunch of people emailed me yesterday, should we be buying silver here? And silver right now, it's 10 to 10, is 3102 on the ask. Okay. You're pretty damn close to support. There's a possibility that it could go as low as 29. Okay, but I'm not interested in playing for pennies. All right, I'm looking at long haul again. Everybody was complaining about silver. Oh my God, it's going to go to 20. Yeah, don't you wish you could buy silver at 20 again? We were talking a couple of years ago, buying at 16, 18. Okay, just giving you a point. What's your time frame? If you're freaking out over the drop in the market right now because you're trying to retire, oh my God, and I just lost all this money in my retirement. If you're living off of your IRA, your 401k, your retirement savings or whatever at this point, and you're freaking out over this, you got too much risk. This is exactly what you've exceeded your risk tolerance. You can't handle this. You should be in safer investments, right? It's just how it works. So where do you put it? Well, consumer staples was a good idea. It still is. Okay, gold and silver, good idea. People talk about fixed income, right? 2 weeks ago, I was looking at CDs, all right, just to see what they were doing. Short-term CDs. See, short-term CDs were paying about 4.3% 2 weeks ago. Here's a chart of short-term CDs right now. Okay, so if you look at this, just take a glance here at some of the different banks just to see what you're going. Okay, best one you could find on there, 3-month CD, 4.25 out of 5-star bank in New York. But 4.1, 4.15, 4.2, and then to 4.25. But a lot of them at 4.1. Okay, the bottom half here. All right, 4.1% for CDs that are anywhere between 1 and 3 months. Now, you take a look at this chart, and this is long-term CDs. Okay, and what I defined long-term here was anywhere between 1 and 3 years. 4%, 3.85%, you have a descending yield curve. Mortgage rates are down. The interest rates are down. You look at the 10-year Treasury. The 10-year Treasury's fallen off a cliff since, mid last week, all right? We went up from somewhere around 4.15 to, I think we're around 3.8 something this morning. Interest rates are dropping. Then you look at the economy. And we had the ADP payroll numbers come in this morning. We added another 228,000 jobs. Not losing them, we're adding jobs. Now, unemployment rose to 4.2%. That was because they miscalculated, like they always do, everything last month. All right, so unemployment's at 4.2. That's still high, but we're adding jobs. The whole point to this is, as I said at the top, this is a game of chicken. We're going to see how the rest of the world, China's kind of okay, but the rest of the world has no other option than to come to the negotiating table, to say to Donald Trump, okay, we want to charge 25% tariffs, and Trump says, okay, then we're going to charge you 25%, and that's that. And they have no choice but to agree, because China may be able to hold out because they've stolen all the manufacturing in the world for the last 20 years. But Europe can't, Canada can't, South America can't, Asia can't. They don't have a bargaining chip. You're not going to sell product here if we can't sell product there. Simple as that. This is genius, if you will, on how this is working. We didn't increase tariffs as much as they were being charged us, so you were still getting a profit margin on your tariffs. We were giving you the benefit of the doubt that we have a higher standard of living here in the United States, just not as crazy as it was, and they can't handle it. You have countries all around the world that have gotten so accustomed to taking advantage of the United States that they're freaking out when they can't. I laugh hysterically at Germany saying, we're not gonna do anything with American products anymore. Okay, fair enough. That means you won't do anything with American tanks, with American rifles, with American troops, with American posts, with American dollars that are spent by those troops. I hope you like speaking Russian. Pinball out.